welcome to this month's Trader Connect webinar. I'll give it a few minutes for people to arrive, but while we wait for them, we'll just go through the usual little spiel. Okay, so as you know, we are around Swiss. This Trader Connect webinar, we do it every month. But okay, for those of you who haven't heard of Rand Swiss before or don't know that much, I'm sure you have heard of Rand Swiss if you're on a webinar, but if you don't know that much about us, who are we? Okay, so naturally, Rand Swiss, we are a registered financial services provider. Right there, that is our FSP number. And Rand Swiss, we pride ourselves in service and our work, what we do, and for that reason, we have won quite a few awards. So if you look on this little slide here, you can see all the awards we've won since 2019. We won some, well, okay, we didn't really win awards in 2018 and 2017, but we did come second in 2018 in the overall top stockbroker category. In 2017, we were third. So we improved every year. 2017 third, 2018 second, and then 2019, boom, we got first place. 2020, unfortunately, we dropped back to second, and then last year we went back up into first place. 2019, we also got the top advice broker award. 2019 and 2021, we got the People's Choice Award, and this is the award we covered the most. Actually, many people think, oh, top stockbroker, but because we pride ourselves in our service, because we really want to keep our clients happy, we really do try to go for this People's Choice Award, and luckily we succeeded in 2019 and last year. Hopefully we'll succeed again this year. 2020, we did not necessarily come first in top stockbroker. What we did come first as top online broker. And then 2020 and 2021, 2 years in a row, we got the award for best tax-free savings account. And we do have a good tax-free savings account. We don't charge you any management fees or platform fees for our tax-free savings accounts. We don't have any minimum brokerage fees, like the brokerage is 0.25, which is very low, but there's no minimum, meaning you don't have to spend a certain amount of money, or we're going to charge you like 150 Rand. We always charge you the 0.25%, regardless of how much you trade. Okay. Then what do we do? Like, okay, I already spoke about tax-free savings accounts, so you guys know about that one. Online trading, we got that award in 2020. But online trading, for those of you who don't know, is exactly that. We just give you the online platform. You log in, you trade yourself. We don't give you advice. We don't tell you what to do. We do send our trade ideas, like the one we sent out yesterday on Sasol, and we'll look at that one just now. But at the end of the day, you trade on that trading idea using your own discretion. You manage the account yourself. We just give you the platform. Private broking, pretty much the same thing as online trading, but you would like to have some advice. You would like to speak to a broker. You would like to discuss your trades with a broker and see how the broker feels about it, or maybe you have a long-term investment portfolio. You want to open a long-term position on something. You can call your broker and say, hey, what do you think of this position? Do you have any research on the stock? And so on. So at the end of the day, you manage the account, but you get some guidance from us when and as you need it. Manage portfolios. That's where you as a client, you're just mostly hand off. You're just saying, look, I don't have time to watch the markets. I don't have time to go look for stocks. I don't have time to study the stock market. I'm just going to give you guys the money. You manage it for me, because you guys watch the stock market every day. It's your job. So there you go. So here's money. Build me a portfolio. Structured products. We've got some good ones right now. So basically, an example of one of the structures we got is basically structures much like ETFs. They track an index, but they tend to be fixed investments. So this one, I think now we've got is, I think it's 5 years. But what it does is it's saying if the index is up or flat, even, it doesn't even have to be flat, up. It just needs to be flat after 5 years. This structure will give you 80%. And I'm sure every one of you would like to have 80% over 5 years. It's not a bad deal, but it also comes with capital protection. I think this one is 40%. So if after 5 years the market is down by less than 30%, it's down, but by less than 40%, you get 100% of your capital back. So that's a structured product. It protects the downside. So if it falls by more than 40%, if it falls by 41, 42%, then unfortunately you're going to do whatever the market did and lose that money. But if it fell by 10, 20, 30% after 5 years, no worries. Here's all your money back. But if the market is flat or up by even just 1%, there's an 80% return. So that's usually how structures work. Offshore transfers, it's pretty self-explanatory. You've got some rands, you want to convert it to dollars, pounds, euros, Australian dollars, whatever, and pay it into an offshore stockbroking account or an offshore bank account. We can help you with that. Wealth management. So I work more on the stockbroking side. So I work more on this side here, the top three. Wealth management is more the guys that sit down with you and they do a like full needs analysis with you. They come up with a product that suits your risk profile. They do RAs, life insurance, estate planning, all those kind of things. So that's wealth managers. That's not something I do. I'm just the guy. You just say, you want access to the stock market. You want to buy some stocks, I'm your guy. You want to build a portfolio, I'm your guy. But if you want someone to sit down with you and do a needs analysis and take a holistic view of your entire situation, your age, your income, all those kind of things, that's the wealth managers. They'll happily assist you with that. Tax-free savings accounts, we spoke about that. Network partners. So these are just all the networks and partners we work with. Media partners, you will regularly see guys like Gary and Viv in the media on CNBC, ETV News, SABC News, MoneyWeb, all the SAFM, Classic FM, 702, and so on. And then these are some of our also our platform, or let's rather say our product providers. So we use Swissquote as a platform. We use Velocity Trade as a platform, Saxo, although locally they now trade under DMA. We use them. We use Momentum. So usually if you go for a tax-free savings account, we will probably do it for you at Momentum because that's where we got you the best deal. Structures, we usually, or RAs, we use Sanlam. We use Investec for the offshore transfers. We also do a lot of Investec structured products. But yeah, these are all our partners. Okay, enough of that. So just the usual disclaimer. I'm going to have a look at these stocks. You are more than welcome. Before I forget, in the chat, if there's specific stocks or specific charts you want to have a look at, by all means, put it in the chat. This is mostly just technical analysis. I try to do some fundamental stuff in there from what I know. But if you want to talk fundamentals, it's much better to attend Gary's webinar, which he does, his global market outlook. He also does this once a month. And that's where he talks more about fundamentals. He talks about macros and he talks about specific stocks he's looking to buy, not because of technicals, but because of fundamentals and all those kind of things. This one, more technicals. But yeah, if you have any, please put it in the chat. I'll happily have a look at them, but I am by no means going to give you recommendations. I'm just going to put on all these indicators. I'll put on my trend lines and my moving averages and so on. And then based on all those things, I want to say, well, okay, this looks like it might be a buy or a sell or it's a hold. But by no means am I going to say, you should go out and do this now. This is just my personal opinion. This is not a recommendation. Please trade using your own discretion. Okay, let's analyze your trades. I will start us off with a trade idea I sent out yesterday. Sorry, I just want to bring up the screen here. Okay. For those of you who have local trading accounts, this will look very familiar. This is the Velocity Trader platform. If you don't have an account with Rand Swiss yet, and you want to have a trading account, and it's a local account, and it's predominantly trading account, i.e. it's not a long-term investment account, it's a CFD trading account, you want to trade futures, Forex, and all those kind of things, you will most probably get this platform right here, Velocity Trader. as I said yesterday, I personally sent out a trade idea on Sasol. So, and it was a short. So why exactly did I think we should go short? If you got the email, which we sent out, you would have seen my reasoning in it. But if you haven't had a look yet, basically, first thing first, this 400 Rand level here on Sasol seems to be a bit of a area of resistance. It's struggling to break above it. And of course, there's this ascending triangle pattern that's also working its way. I mean, you can actually move it a bit like this if you want. Yeah. So again, now this depends on how you view ascending triangles. People are divided. Some people say it's pushing higher, and eventually it's going to break resistance and go higher. Some people say no, it's going to break the support and then it's going to go lower. Quite frankly, in my experience, it can do both. You're just going to have to keep an eye on what happens. So you're more than welcome to not trade Sasol yet, based on my trade idea from yesterday. You can wait to see which one breaks first. Support resistance, and you can say, oh, Christo is wrong, actually it's long, or it broke support, Christo is right, let's go short. Or if you want to be a bit more risky and just say, I'm just going to go now. Because of course the reason is, say you wait, I am correct, let's pretend I am correct. And it does indeed break support. You might only get in below 390 or at 380. Now, of course, that's a safer way to go, because then you have kind of confirmation. Oh, support broke. It's probably short, let's open the position. But if you're going now, you're getting a much better level. Like you're getting, like, say you got in at 380 as opposed to almost 400. I mean, that's a 20 Rand move you're missing out on. So yeah, but the risk is I can be wrong. It can actually break resistance and continue going higher. So it kind of depends how risky you want to play it. I personally feel it's going down. Actually, I can be wrong. I mean, I'm not the oracle. I don't know everything. But personally, I feel it's going down, and I would rather take that extra move. Because, I mean, look how far it can go. If we put where's the next area of support? It's about here, 350. That's the next line. So if it goes, it will probably go back to 350. So this is the difference between a 50 Rand move and a 30 Rand move. I mean, there's a 20 Rand difference. So I'd rather go in here, but that is the more risky approach. The other indicator I had on there, which also made me think it's probably going short. And I mean, if you've attended my webinar, I've spoken about this many, many times. The divergences. Look how big these divergences, or well, this divergence is on Sasol. As Sasol has continued going higher, what has happened on the MACD? It has continued trending lower. That's a big bearish divergence. Naturally, I will always give you the usual disclaimer. These divergences aren't 100% correct, but they tend to be very good. But here's a good example of where a divergence failed. So if we look at this specific area here, Sasol reached the same level, which is at 300, but on the MACD, what happened? There was a bearish divergence. So many people might have thought, oh, I should go short. Maybe if you go short, wasn't the worst thing. I mean, you could still have made some money here, but it didn't really crash down as people thought. The trend didn't change from bullish to bearish. I mean, eventually it just went higher and higher. So that shows that the divergences, they aren't always 100%, they aren't everything, but they are a good indication. In my experience, I like divergences, and this is a big divergence on Sasol. Take note, these divergences can, of course, be wrong at times. But yeah, so that's my reasoning behind going short on Sasol. My second reasoning is if we move to Brent. For Sasol, of course, is a oil company. Yes, they do more than oil, but that's where they get most of the money. If you look at Brent, same thing. Brent if we go from about here, where's this line? So there's your line. Brent really has been struggling to break above $115 a barrel. If that holds, what will we say? Brent will fall, and along with that, Sasol's share price should fall as well. So yeah, that's my, apart from the technical indicators, I also looked at Brent and I thought, well, okay, Brent, same thing. It's got resistance. It's probably going back down to like at least $100 a barrel. So Sasol should fall along with that. And that is why I decided to open a short position on Sasol. The only thing that might be a bit of a concern is if we look at the rand dollar. So if oil falls, at the end of the day, oil is priced in dollars, USD. So if the rand weakens, Sasol makes more money in rand terms. So that's the issue right now. Usually, because this is kind of a correlation between Brent and rand, the rand strengthens when oil strengthens because it's risk on. It's kind of like we're positive about the global economy, oil prices go up, rand go up. When we're scared about the global economy, the rand weakens, oil weakens. Now the issue, of course, is oil can weaken in a risk-off environment, but so will the rand weaken. And of course, we're talking about currencies here. So when we say the rand weakens, we mean the US dollar here is going up, not down. So if oil weakens, the rand can weaken as well, and they kind of cancel each other out. So Sasol kind of, yeah, okay, fine. We're earning less dollars per barrel, but we're getting more rands for our dollars or US dollars. So they kind of cancel each other out a little bit. So yeah, that's the biggest risk, I think, to the trade, my Sasol trade at the moment. But at least at the moment, also it looks like the rand is strengthening, because again, there we go, 16 rand 20. It tends to be resistance for the USD ZAR, and it looks like the rand might be strengthening to where? Well, if I look at the chart, the first kind of area of support is here at 1580. And then the next one is 1550. So if the rand weakens, the first level to watch is 80. So that's about another 8 cents. And then the level after that is 1550. I actually personally opened a short position on the USD ZAR at 1558. Initially, it went very well for me, as you can see here, but then immediately started going against me. And now I am 4 cents out of the money. I'm 4 cents in the red, but at least it's looking like it's recovering again. Let me just remove these. Okay. Sorry, this Satrix Finney. Somebody wants to look at this. Satrix Finney. Okay, so let's just see. Supported by, I'm assuming you're talking about the simple moving average, not the exponential moving average, but we can put it on there. Okay, so he's talking about a 200-day moving average. Okay, maybe he's talking about the exponential moving average. I'm not sure. Okay, but they are saying Satrix Finney supported by 200-day moving average, and also possible 100 basis point increase, which will aid financial stocks, and that's the index. Okay, so he's thinking this. Yeah, there might be. Okay, so he did say simple moving average. So let's move the EMA. So he's saying there might be an expectation of 100 basis point increase. I'm assuming he's talking about the Reserve Bank rate. And yes, interest rate hikes are good for financial companies. Why? For like banks, for instance, banks and so on, because it means they get to earn more interest on deposits. And Satrix Fini is, of course, ETF filled with financial companies. So this ETF in itself should benefit from rising interest rates, which, I mean, I'm 80% sure interest rates will continue to hike. If we talk about America, they've recently done a 0.5% interest rate hike, the first one in 20 years, the first time they did a 0.5% interest rate in like 20 years. The indication is that they will continue to do that to try and fight inflation. There are some negative economic data coming out from America, which make people think, well, maybe they won't be quite so aggressive. But there's another school of thought which says the Fed will, as they have no problem inducing a recession to fight inflation. But yes, I think interest rates are going up by a lot for at least a year or two. If that's the case, then financial stocks like banks or a financial ETF like the Satrix Finish do well. Okay, support 200-day EMA. I mean, there was this one time where there was a bit of support there. What if we change this to 100-day? 100-day. See, 100-day, yes. If you look at the 100-day EMA, of SMA, simple moving average, there's a bit more support. It broke through, but it looks like it might have been a false breakout. And now it's back up. So that at least is a good sign. Let's put, what's the MACD telling us? Okay, so what's the moving average convergence divergence telling us? So I know I use this a lot to talk about divergences, but at the end of the day, the primary purpose of the MACD is as a trend indicator. It's trying to tell you what is the trend at the moment. Take it with a bit of salt because it's a lagging indicator. So it's using kind of outdated data sometimes. But at the moment, it's telling us that the Fini is in a bearish trend. There's two things to look out for. First thing, is it above zero or below zero? Above zero, bullish, below zero, bearish. Second, is the MACD line above its signal line, bullish, low, bearish? Is it trending up, trending down, bullish, bearish? So at least it's gone back above the signal line. That at least is bullish, but it is below zero, which is bearish. There's not really divergence. But I guess this right here is another good example of why you need to sometimes be careful of these divergences. Because right there was another bearish divergence. Okay, there's your bearish divergence. Even though the Satrix Fini was going up, so many people might have thought go short. Again, wouldn't have been the end of the world if you closed it quickly enough because it did fall, but then it ended up rising again. Now, this would have kind of depended where you put your stop loss as well when you opened the trade. So let's say you were lucky and you went in right here at the top. So around 1650. If you put a stop loss, a tight stop loss, I mean, if you put your stop loss wide, then you might have still ended up being in the trade and you could be back in the money again. But if you put your stop loss, like say, you use the 1 Rand stop loss. I mean, it was 1650, 1 Rand. What is 5% of 1650? It's a little more than 80 cents. So a 1 Rand stop loss would have been way more than the 5% stop loss. Then yes, definitely would have been stopped out. So I guess that's also something to take into mind. But okay, sorry. We're going back to what are the indicators telling us about now. So right now, it's kind of mixed. It is trending up. It is above the signal line. That's bullish. Kind of bearish though. Let's look at another indicator. into like the relative strength index. So relative strength index, for those who don't know, above 50 bullish, below 50 bearish. It is below 50, but I mean, it's like by one little point. So for me, if I look at this Satrix Sygnia at the moment, from a technical analysis point of view, so I'm not thinking about fundamentals now, I'm not thinking about rising interest rates, just a clean, simple technical analysis point of view, it's kind of a wait and see. Like I'm not getting a clear bullish signal or a clear bearish signal. The MACD, yes, it was below, but it was trending up. The RSI, it's below 50, but I mean, not really. So yeah, at the moment, if I look at this Satrix Sygnia, I'm kind of like, wait and see. I'm not going to open any positions. If you do have an open position, that's fine. It's a hold. I'm not saying close the position. It's a hold. If you don't have a position yet, just don't do anything. Just leave it. Wait and see what happens. Okay. Someone wants to have a look at Sygnia. Yeah, so the thing about Sygnia is kind of like, it's, I don't know if it's a medium cap yet, but it's definitely not large cap. The thing about small caps and medium caps, especially in South Africa, is that they're very volatile one. And usually they're volatile because they have low liquidity. So that is why you see these like big candles on them. Because I mean, it's very easy for someone to buy a share at 1720, and then the very next person will buy a share at like 1650, and the next person will buy at 16. So you get these big price swings in these small caps. And that's exactly what we're seeing on this chart of Sygnia. It's just like these big candles. It's just all over the place. But what we can say though is, I mean, I don't even intend to put on watches there, and look how this 100-day moving average acted as resistance, yeah, okay, false breakout, came back in, boom, came out, and then resistance again, and then resistance. So it seems to be trending down along with this 100-day unit, except for this little bit here. This is a fluke or something, I don't know. But yeah, this 100-day moving average really seems like it's acting as a strong resistance for Sygnia. I would put on some other indicators, but the thing is, because these small caps are so volatile, there's a lot of white noise in them. So I find that technical indicators don't work quite so well on these small caps, just because there's a lot of white noise, a lot of big movements. So yeah, I could put on some indicators to see if I can make a call, but I mean, I won't trust the data, what I'm seeing. But what we can take away from this is, it seems like the 100-day moving average is a strong resistance for Sygnia. Unfortunately, though, you can't open short positions because there's CFD available on Sygnia. There are some small caps where we have CFDs available on them, but very few. Most people don't really trade CFDs on small caps. So the provider was like, well, if there's no demand for it, we're not going to have it, because of course it costs money to have all these derivatives on the platform. So yeah, unfortunately, even if it got there, you wouldn't really be able to open a short position on Sygnia, because you can only open short positions on CFDs. Okay. By the way, if you want to look at international stocks as well, don't just put it in the chat. We will look at international stocks when we look at the other platform, the DMA platform. But yeah, in the meantime, we can have a look at another 2 South African stocks. Someone would like to have a look at Sibanye Stillwater. Okay, Sibanye Stillwater, again, 100-day moving average, acted like nice resistance, boom, came up, acted as support temporarily, and then broke through it again. Okay, let's put on another indicator. Well, okay, actually, before we do it, let's do the basics. So this area right here at 47.50. That was nice support, and now it kind of broke through. Could be a false breakout like we saw here. And then it went back up. So actually, it might be a good time to actually open a long position on Sibanye. Based on technicals, I'm not talking about any fundamentals here. My usual MACD on. MACD, I mean, no surprise. You can just look at the chart. It's a bearish trend, but it has just crossed above the signal line right there. Let's see if we can zoom in a little bit. There. Of course, that doesn't always mean something, like right there also crossed, just to cross right back down again. So you always have to take these indicators with a pinch of salt and do some, use your discretion. As I said in the beginning, what if we put the Ichimoku? It's very bearish. Yeah, it's not very bullish, if we have to be honest. Because that big fat red cloud, this is the leading indicator. This is kind of like the indicator trying to predict what to expect. And it's predicting that, yeah, it's going to continue falling. The short term and your medium moving average, short term well below your medium term moving average. And then your lagging indicator, for those who don't know, it's basically whatever the price is now, but they push it back 26 periods. So on this, we're looking at the daily chart, so they push it back 26 days. And if it is below where price was 26 days ago, that is bearish. So the Ichimoku is very, very bearish. What if we try RSI? So it went oversold. So like I said, below 50, bearish, but below 30 is considered oversold territory. So that is kind of where I expect, okay, the trend has now bottomed out. We can expect it to go back up. It did bottom out, and it did, in fact, start going back up again. But naturally, it's a wait and see kind of situation. But at least two indicators kind of giving me bullish signals on Sibanye at the moment. I mean, it's right at support. It went down, came right back up. So support actually held, which is a tiny little breakout. And then now it's back above. So this is a good level to buy if you're looking to buy. It went oversold, which we want to see. Kind of the same here. You see right there at the top. It didn't exactly go overbought, but I mean, it graced it. It graced that 70 line. Like we can see there, it says 69.86. So if you look at that little green number right there, 69.8. So I mean, it was like 0.14 points away from 70. It was pretty much oversold. And then it came back down. Now, overbought, I mean, now it's oversold. And it's starting to trend up again, not 100%. Sometimes it can be wrong. So don't just think because something is overbought, oversold, the trend is going to change. But as you can see, it can be a good indicator to let you know, hey, something's up. I should consider reversing my position or opening a new position in the opposite direction or so on. Okay, then someone would like to have a look at Thungela. Okay, Thungela. If we look at it, I mean, immediately, what can we see? I'm going to put it there. Well, okay. As I've told you guys many times before, support resistance, it's not always like a fixed line. It's a lot of time, it's an area. So this area between 270 and 280 seems to be giving Thungela some problems. It seems to be giving it strong resistance. And I can bet you if we put on the MACD, there's going to be a divergence there now. And there it is. There's your divergence. So if anything, Thungela right now looks like a short to me. It's really struggling to get above that 280 level. I mean, in fact, it's mostly 270, but it does sometimes get a little bit above 270, but then it just gets stuck at 280 and comes right back down again. It's not necessarily going to crash back down here. I mean, it can get stuck in a range. So a lot of times when a stock runs out of momentum, so what happens is it doesn't go and then drop. It just goes and then it stabilizes in this area while it waits for news to change. So maybe Thungela will release results that's better than expected. It will go up, or worse than expected. It will go down. Commodity prices crash, and then Thungela goes down. So it could just get stuck in this range. But I mean, even if it doesn't go all the way down, that's still a nice. But so 70, if you open it up here at 70, all the way down to 20, that's a 50 Rand move. I mean, that's not a bad move. So bearish divergence, getting stuck at resistance. What's the RSI telling us? So there's a good example. You see there, went overbought. Did it fall? Nope, continued to rise. Oversold, continued to rise. And only then did it start coming back down again. So this is a good example of always take these indicators with a pinch of salt. They're not always 100%. Put on as many indicators as you can. Try to bring them all together and then come to a conclusion. Don't just use the one or two indicators and say, oh, it's overbought. Let me short it. You would have heard very bad if you shorted Thungela at wherever. 180. I mean, it proceeded to move on another 100 Rand. So yeah, that would have been some pain. Use more than one indicator. Do your analysis, come to a conclusion. Never just use the one indicator. Let's try Shimoku. So there you can see the gap between the short-term moving average and the medium-term moving average has closed a lot. Look how big that gap used to be. And now there's barely a gap anymore. So this can change at any moment. So that is a little bit I won't say that's bearish, but it has become more bearish than it used to be. The thing about lagging indicator is above, so that's bullish. But when it starts moving inside of price, that means there's no direction, there's no trend. So that could mean that Thungela can, in fact, get stuck in this sideways channel. But it doesn't really have much direction. It just goes between 230, 220, 270, 280. So that's something to keep an eye on if you don't want to open the trade right at this moment. Okay, but the question was actually too late to get in now. I mean, I would say so. I won't necessarily open a short position on the stock at the moment, but I most definitely wouldn't buy at this level. If you want to buy, rather buy below 240, I would say. If you get in below 240, that might be a good level to buy. But at 270, 280, no, that doesn't look like a very good level to get in. As the stock will most probably actually fall if you look at the technical indicators. Okay, the final South African stock we'll have a look at is Firstrand. Okay, so Firstrand. think you need to know about South African banks. That's something we should also know when you talk about South African financials, is that their fortunes are very much tied to the fortunes of the South African rand. If the rand strengthens, the share price of South African financials tend to strengthen. If the rand weakens, the share price of South African financials tend to weaken. That correlation has gone down a bit in the last few months, I've noticed, because there's been a lot of times where the rand really strengthened a lot and the banks just did nothing or weakened, or the rand really weakened and then the bank strengthened. So that correlation is a bit whack at the moment, is a bit strange, but historically, that's how it worked. If the rand goes up, banks go up. And you can kind of see that correlation here. I mean, the rand went from 1430-ish to 1620, and as you can see, the banks weakened. Now, can you put that down to just rand performance? Probably not. I mean, equity markets in general have been crashing down, especially, and the riskier the asset, let's always say that, the riskier the asset, the harder it's been. And of course, South Africa, emerging market, we're seen as very risky. So that can also be a reason why Firstrand went down along with the rest of the market. But what's this telling us now? That cloud has gone red, which means officially Firstrand is in a bearish trend, predicting the bearishness to continue. One thing I didn't say earlier, the border of these clouds, they can, a lot of time, they can act as support and resistance. Like you see, there's a good example there. So we might see Firstrand going up and just following this border and then going down. So there might be some upside still, but yeah, I don't know. I think, especially if you look at where resistance and support is, so it's around there at 70 rand resistance. So it can maybe go up to about 70, and then we'll see it falling again. But yeah, the Ichimoku very much red cloud bearish. Lagging indicator way below, bearish. Short-term moving average below, medium-term moving average, bearish. Let's try. MACD telling us it's probably going to be bearish. Yep. Not surprising at all. It's bearish. Same thing though, it has gone back up again. So that is a bit bullish, but as I showed you that other chart, it can very easily go above the signal line and then drop right back down again. And that's maybe what we can see here. It might go up to about 70 and then it starts to drop, and then you'll see the trend down continue falling. RSI, not really giving me much. It is below 50, but exactly like the, yeah, it was the Syberian Finny. Exactly the same thing we're seeing here. It's like below 50, but barely. So it's not really giving me much to work with. But okay, that's the last South African stock we look at. I'm going to switch to our offshore platform. Sorry, just hold on 1 second. Okay. So this is the DMA or Saxo, but like I said, they're now trading under DMA locally in South Africa. This is the last, I think that was the last one we looked at in the previous one, which is Ark. Ark naturally has not been doing well at all. For those of you who don't know, Ark is an ETF in America, and it's very like tech heavy, speculative tech stocks. But yeah, as we can see, it's not been doing well. I mean, it peaked at, there we go, $160, which was in February 2021. And it proceeded the next year and 3 months to go down, down, down. And obviously it's down to $43. So, I mean, it's dropped almost $120 since February 2021. It was very popular in 2020 when tech was all the rage. Everyone couldn't get enough tech stocks. And because this Ark ETF was the techiest of tech ETFs, people loved it. It just went up, up, up. But yeah, it's been doing nothing since then. Just going down, down, down. I think last time we checked, it was about 78% down. So yeah, that's quite a bit. And if we look at the Ichimoku indicator, doesn't look like it's ending anytime soon. This cloud has just been red, red, red. Was a bit of hope there, but it's back down. It's widening. The lagging indicator is well below where price was. That's very short-term moving average, below medium-term moving average. That is also bearish. So yeah, things continue to look bad for Ark. Okay. Let's do another one that everyone always wants to have a look at. Tesla. Tesla is one of the stocks held in Ark. But Tesla at least haven't been doing quite as bad as Ark has. Let's even put a... So it does look like Tesla had some, okay, rather let's do the area support. Yeah, it seems like Tesla had some support. In this area about here. So we can see it found resistance there, boom, went up. Support, support, went back up, and now it's broken through support. It looks like it might be. Let me just make it a little thicker for you. There you go. It looks like it might be false. I mean, what happens next is very important here, because what we could call this, what happens sometimes, it comes back, it tests it, and it falls back again. This is called the kiss goodbye. If it comes back, it tests that area, and then it falls. But it can also be the false breakout, false break of support, and it can go right back up again. So with Tesla, it's kind of like a wait and see what's going to happen today with the markets, because of course American markets aren't open yet. They open at 3:30. Let's see what happens today. And I wouldn't just want to see it break this line. I want to see it break above $800 there. And then it might be back into a bullish trend. So if I was going to trade Tesla, I probably wouldn't do it this week. I'll give it a few days. Give it today, tomorrow, Friday, come back Monday and see where we are. But yeah, look, just giving it a quick look. Tesla is looking a bit bearish. So the moving average is way below medium-term moving average. The cloud is big. Same thing with a lagging indicator. Way below where price was before. So that's all bearish. If we put on... Okay, MACD, what's the MACD telling us? It's doing nothing but trend down. It's not even really like a divergence. Because at least if it was higher where it was there, you could say, oh, there's a bullish divergence. Maybe it's going to change, but it's not. There's no divergence. Tesla is just trending down, no divergence. So that's also looking very bearish. RSI, very bearish. It did briefly touch the oversold line, so that is a bit of a bullish signal, but it touched it. Like you guys can see there it went overbought, and it continued to crash. So those were good overbought signals. There it touched it, so that can be kind of bullish. That gives us some hope for Tesla. But I mean, that's like one bullish signal and 5 bearish signals. So yeah, it's not really something to get too excited about. So yeah, but like I said, I mean, I want to see what happens here. So give Tesla the week. Let's see what is Tesla going to do today, tomorrow, and Friday. If we come back on Monday and it's above, happily, I would say let's go long. If it's below, I'd say looks like it's still got some bearishness in it. Let's go short. Okay, someone wants to. Sorry, I just want to take a note here. Someone would like to have a look at Intel. Okay, Intel. In all likelihood, you're watching this webinar on a PC with an Intel CPU in it. You don't have AMD, but I'm gonna guess it's probably Intel CFD. Okay, so what are we seeing? Let's start with the RSI. It's kind of turning upwards. It's kind of looking like it wants to go bullish, but it is still bearish. So yeah, it's like that. Firstrand and Sygnia ETFs. It's like so close to the 50 level that I can't really say, oh, this is bearish. It can go bullish any moment. Ichimoku, however, is telling a different story. Bearish cloud, moving averages bearish, lagging indicator bearish. Do we have some? I'm looking for horizontal. So this seemed to be where support was at 44.50, and it's broken through this, and now it's testing it. So this is kind of like the same situation that Tesla was in. Is this a kiss goodbye, or is this a false breakout? It's kind of, because this can also be a situation of where support is not an exact line. It can be a situation where support is this area between 42.50 and 44.50, this $2 range can be support, and it just bottomed out at the bottom end of support, and it can be heading back up again. If that is the case, let's put another line. Let's see where resistance would be. So I would guess, yeah, resistance would be around here at 47.50. $47.50. So if it does go up, there's a nice little $3 move for you, because that will line up as well. Like I said earlier, the border of the clouds, they tend to act as resistance. So this line here lines up with that cloud border. So it might find resistance there and then come back down again. Although I have no reason yet to believe that Intel is in fact in a horizontal channel like that, because I mean, like we said, they went up and then came back down. We haven't really seen any movement of Intel bouncing between these levels. This is purely speculative on my part. If Intel goes up, that's the next level to watch. That is the next area of resistance. Okay, I think we can do probably 2 more stocks. Someone would like to have a look at Apple. I particularly really like Apple as a stock. I think Apple has done a good job of creating this like ecosystem where you, once you're in, it's kind of like, well, no, I don't want to move. It's difficult to now move from iTunes to Android and iCloud, blah, blah, and so on. So I think Apple has done a good job of creating this ecosystem and all this Apple TV and all those other things. But okay, there you go. Now, this point of view, Apple, as you can see, the cloud is red, RSI is red, lagging indicator is below, and short-term moving average. So this is also looking very bearish still for Apple. But there was support right there. So going back to about here, Apple has been finding support at 140. And that's exactly it. Touched that support. Boom, it started recovering again. So that at least looks good. Kind of looks like Apple might be going higher, but that's hard to say. Where's the resistance? Yeah, you see it's right at resistance kind of as well. Because if we see, I'm just going to copy this line. You can see Apple previously found resistance at 150. I've got it 149.84, but it's 150. Found resistance, broke out, was a false breakout, resistance, and then finally it broke out, and then it got support, and now it broke below that support. So this can easily also be a kiss goodbye. That was support. Broke through support, now it's testing support, now I can go back down to 140. So this 150 to 140 range can get very easily, it can get stuck in this range. But I mean, if you want to open a short position on Apple, that's also bad, because that's like nice $10 move. I mean, in rand terms, that's 160 rand move per share. So that's not a bad thing. Let's try the MACD. So there was a nice big divergence. You can see it right there. Arrow. Massive divergence. And what did we learn? The divergence was good. Apple did in fact crash. It went all the way from 180 to 140. That's a nice big $40 move that this divergence warned us about. But at the moment, okay, we're not seeing any divergences, but what we do see is that Apple is in fact in a bearish trend. Well, we want to look at the blue line. The red line is the signal line. Ichimoku is telling us Apple is bearish. You might find resistance here. So if you're a risky person, you can go out right now. Well, not right now. When the market opens at 330, open a short position on Apple and look to take profit at 140. Just take that $10 move. But of course, it's purely speculative. We don't really know if Apple is going to get stuck in this range. So yeah, but I mean, the signals are bearish. The signals are telling us that Apple is looking bearish, like Apple could be going lower. But okay, final one. Okay, someone just wants to have a look at JP Morgan. Sorry, I just want to remove these things. Okay, JP Morgan, another bank. So what can be said about South African banks, say for American banks? If interest rates go up, they should profit from it. From the get-go, I can already see there is a nice little bullish divergence. Because I mean, we can clearly see JP Morgan has been trending lower. But what's been happening on the MACD? It's been trending up. That's a nice bullish signal. Yes, okay, the cloud is bearish, but I mean, it's not as thick as it used to be. That's kind of bullish. Lagging indicator is indeed below. So that is a little bit bearish, but it's not that far below if we go forward. So the Ichimoku is mostly giving bearish signals. That is true, but I mean, that is to be expected. Has been in a long bearish trend. The thing to look for here is this divergence, because the divergence is telling us, hey, this trend might be changing soon. As always, disclaimer, these divergences are not 100% They can be wrong, but they can be good in leading indicators as well, letting you know, hey, something is changing. Let's try one more indicator. Where's my RSI? So same thing we saw here, JP Morgan. So went oversold, and there was a nice move there. Of course, let's say you would have taken your profit there because then it continued to fall. But now it's been touching that oversold area a lot of times. So add that to the bearish, the bullish divergence on the MACD, and it actually doesn't look all that bad. It might actually look like JP Morgan could be recovering soon. And if you want to risk it, you can go out and take a long position on JP Morgan. But okay, I think that's all the shares we will have a look at today. Thank you for attending this webinar. Like I said, we always do them, or well, we try to do them once a month. This might be a month here or there where we don't do them, but we try to do them every month. There are other webinars as well. If you want to see a list of our webinars, you can just go on our website. Let me just open, where is that now? If you go to our website, you click on events at the top, you can find a list of webinars. I would highly recommend this one. This will be done by Anthony Clark. If you don't know who Anthony Clark is, he's one of the foremost experts on South African small and medium mid-cap stocks. He's very insightful, he's very smart, like the biggest asset managers in South Africa use him. Uses his research notes and his advice when building her funds. He's very knowledgeable. I would highly recommend attending this webinar. And then Global Market Outlook, like I said, that's Gary Boyson. He's the more macro guy, he's the more fundamentals guy, where I'm more the technical analysis guy. But if you want to discuss fundamentals around companies, fundamentals around the economies and so on, I would definitely recommend doing this webinar. But yeah, thank you for attending the webinar.